מאחורה שם בפריים, זה חייב, אין ברירה. אחרת זה לא יהיה יפה.
We're going live now.
All right.
Just a minute. Okay, you're live. Everybody's cool? Okay, you ready to go?
Mm-hmm.
Let me just close the door. Good luck. Can you move a bit to your left? Yeah. Okay. You know we're going with the opener. And rolling. Wait a minute. Okay, we are rolling.
Please read the disclaimer carefully. The information contained in this TV show is not tailored for you and is provided for informational purpose only. In no way shall this TV show be considered an investment advice to you.
Hello traders, I'm going to share with you my trade idea on the S&P 500. It's March 21st and let's start. Okay, so as a solid base trading activity, usually my trade ideas are based on market fundamentals rather than technicals. However, this one has additional and exceptional parameter that can be visualized as follows. Let's take a look at the charts. So I'm going to draw some lines here. Basically, the lines are considered as schematic rather than accurate points or accurate price. So please take these lines that I'm drawing as schematic and not accurate. But it can present the general idea of my trade idea. Thank you. Okay, I will start from 2007, starting from actually the subprime mortgage crisis and what happened since then until now. Please pay attention to the lines that I'm drawing. It's very important to understand what these lines are telling us. Okay. The lines that I draw until now are the market movement since 2007 until now. What we see here, this is the point where the subprime crisis started. It was 2007, and we saw a free fall of the market from that point until 2008 or late 2008, the beginning of 2009. Take a look at this movement. These lines presents the Elliott wave theory. Elliott wave theory provides us with some information about what is the general movement of the market, or the general trade, or the long-term trade of each and every market. Here we see that since 2007 until 2009 we had a major downtrend, and from that point onward we moved straight from the bottom to a record high as of today in 2017. Okay. So having this picture in front of us, the only question left is when. When it is going to happen. Asking when it is going to happen, I mean these lines that we can see here on the chart. Okay, this is the expected movement. This movement is going to happen during the upcoming weeks, months, years of the market activity. So basically, the only question here is when it is going to happen. This is the big question that we have to sort out. Now, I have a trading plan. Now, the only thing that I need to identify is the perfect timing for market entry. Timing is a crucial parameter in successful trading activity. In this specific trade idea, it gets much higher importance. Usually, a massive market correction involves high volatility and rapid market movements. Usually, individual traders get lost under such turbulence. They either rush to place a market order, being knocked out, or late in entry, thus losing the opportunity. So let's take a look at the chart again. I want to show you something that will provide us with proportions on the market and what happened during 2007 subprime mortgage crisis and what is happening now, and then we'll understand what can happen actually during the following year. Okay, so this is the period of time that the market went through a rapid downtrend or massive collapse during 2007 and 2008. This is the subprime mortgage crisis, of course. Here, this is the point where we saw the new buyers entering the market. At the beginning of 2009. So from that point onward, we saw a massive market uptrend. Actually, it is more than double of the previous market movement. We can see here in 2000.
Sorry, let me help you with the connections.
Yeah,
okay?
thank you. Okay, so again, here we have double top, and from that point, from 2000, of course, from 2007 subprime crisis, we saw a rapid downward movement. That was the period of time that the market collapsed, and we all heard about it on news, and People left their homes, and it was a disaster, actually. Now, from that point onward, we more than doubled this big crash movement, of course. Now, usually price supports or bottoms takes time to build up, but market highs are there to stay for a short period of time. And another thing that I should emphasize here is that the fact that the market highs are much more volatile and much more aggressive. So here we see an aggressive movement since the beginning of 2017, a strong movement to the upside alongside the US elections, and we all know the results. And from that point onward, what I'm expecting is a sharp correction or a free fall of the US market. Now, usually when the market is falling, it is falling faster than it goes up. So what I'm expecting to see is a rapid downside movement over the next couple of years, or if we take a schematic time, it can take from 2 months to 1 or 2 years, but we are going to see a movement that is going to look like that. This is the movement that I'm expecting over the next couple of months to 1 or 2 years. Now, usually a bear market is starting when we are moving 20% from the price record. It's going to be somewhere around here. Only here we are going to start, or we are going to declare a bear market movement here, somewhere here. The bear market is going to start after this first rapid movement. We are going to see a bear market, or we are going to be under bear market conditions, but this is the point where it will be too late to take the action. Now, we have to identify the right entry before the bear market will be declared out there in the financial media and so on and so forth. We are going to see very strong and sharp movement to the downside. So let me draw a micro picture first, and then we'll get a better sense of when it is going to happen. So again, I'm drawing the lines, the Elliott wave lines of the first market collapse in the subprime crisis, and now I'm going to draw the lines of the market uptrend. And this is where I'm expecting the market to move back to the downside. We have the lines here. This is in Elliott wave, and I suggest that you will go and read what is Elliott wave theory in order to understand what I'm drawing here. This is line number 2. This is the major and the strongest line in Elliott wave theory. This is number 4 here. Line number 4, it's a correction wave, and the wave number 5 is the last that we should see in this current market uptrend. From that point onward, we are going to see the same movement we saw in the subprime crisis. These lines are line A, and then line B, line C, which is the strongest downside movement, and then line D, and then wave number E, or the letter E, of course. A, B, C, D, E is a downtrend wave, or downtrend waves that provides us with the idea when we are going to see the end of the downtrend and start a new trend to the upside. Here, wave number 1 is the first is where the first buyers are coming in, and this is the point where I would like to identify first and smart buyers. This is where the first and the smart buyers are joining the market, and then we have line number 2, which is the correction here, and the big wave, and here are this wave actually provides us with a better sense of upward trend in the markets. Usually we all know that the market is upward trending, and we can join the trend in some specific points. Usually technical traders are joining this market. Fundamental traders and well-known traders are joining the market usually at wave number 1. Now, the fools are joining the market here, usually at wave number 5. This is where the fool buyers are joining the market. Or I'm calling them full buyers, or actually those who doesn't understand the market psychology and trends. These buyers are joining the market at the last wave of the uptrend. From that point onward, what we are going to see is the following line again. Here is wave number A, or the letter A. It's not a number, of course. A, and then we are going to see something like this, which is a correction wave to the downtrend. And right after, we are going to see a free fall, a big wave of downward movement, wave C, and this is where I'm going to stop because I think that this target or this market should, or my position actually, will be closed here because I don't want to be a full seller. I'm going to sell the market soon, in my personal trading activity, of course, and I'm going to end my trade here. This is where I'm going to close my position and wait for further instruction or further market movements. So if you want to know when I'm going to take the position, or when it is going to happen, or my specific alert, I will be more than happy to share it with you. You can join our live shows and our trading activities in our webinars, in our trading rooms, and I will provide you, me and some other analysts will provide you their insights on the market. Of course, we provide only our own ideas and our own activity, not more than that. We are not advising, but we can provide you with a great sense of what is going to happen next in the markets. Not only on the S&P 500, but on some other major markets or major currencies, basically, and major indexes. But specifically here on the S&P 500, this is the one good trade that is going to provide us with huge returns, or hopefully huge returns, when we will enter the market. One more thing that I want to show here, and this is something that I did in the past. Here you can see a clear support level during 2012 and 2014. We had a market correction here, and then at this point here, we saw a breakdown. Sorry. Here, at this specific point, we had market breakdown. We broke down a very clear and strong support level, and this is where I entered the market previously. Of course, I failed and I shook up from the market, but this is very rare activity. Usually it doesn't happen. And I didn't take into consideration the big picture. And now, when we see the big picture, this time, here, once we are going to fall, to see the free fall, it is going to be a one-way ticket without any correction, at least at the beginning of the movement. So basically, the success rates of such trade ideas are very, very high. The only thing that we need to understand is the exact time that we need to enter the market in order to have a lot of breath in order to take this position further to the downside, deep in the money, and then we know how to manage this trade properly without being shaked out. So I invite you to our training room and live webinars in order to be updated on our next activity. Again, this is the targets, or this is the final target, of course, of our trade. In between, we are going to have some more trade targets, and of course we have a training plan with management system and so on. And I'm very excited for this moment. Again, we are on March 21st. Remember this day, remember this show, and we are going to see the market in a very different fashion during the next couple of months to years. Anyway, until then, of course, please consider and watch the market carefully. Those who are trading or traders, be very cautious and pay attention to the market movements. Till our next show, have a great day, and of course be ready to our trade idea. Bye bye for now.
Please read the disclaimer carefully. The information contained in this TV show is not tailored for you and is provided for informational purpose only. In no way shall this TV show be considered an investment advice to you.